Our topic for today, I think I mentioned that, but the topic for today and for the next few classes, lectures, is looking at financial crisis in general. Today we're going to look at the Great Recession. That is the last financial crisis that the world witnessed, and that was in 2008. Okay, and that's the idea for today. Most of my time talking is, most of the lecture is based on a few readings, The Economist, and I think I've got at the end, I've got a few more readings if anyone is interested. Okay, and I'll start with a quick introduction. I'll just introduce you to the topic, and then what we'll do is we'll go through it more methodologically. Okay, so the first start from the end, basically. Well, not quite the end, but near the end, and that was Lehman Brothers, the big investment institution bank, went bankrupt on September 15, 2008. Do you remember that? Do you recall?
Yes.
That it was quite a big thing. It was what Lehman was an investment bank, okay, and it was very heavily involved with the mortgage lending, okay, with the subprime mortgage lending. We shall have a look at that. We shall talk about that because that was at the heart of the financial crisis of 2008. Okay, this and other very sophisticated financial instruments. Okay, as unlike today, when we have an event outside of the financial industry that brought about some economic and financial trouble, 2008, the crisis of 2008, the heart of the problem, the issue was within the financial sector. It was the financial sector that got hit by a bomb, so to speak. Okay, the bankruptcy, everyone, not many people believe that it will go bankrupt. That the government, the U.S. government, will let Lehman go bankrupt. Okay, but it triggered a one-day drop in the Dow Jones. The Dow Jones is an index, well-cited index of the American, reflecting the American market, about 30 industrial companies, US of course. It dropped in one day, dropped by 4.5, the largest decline since September 11, 9/11. Okay, the attack. Obviously now we've seen some greater drops, but at the time that was the biggie. Okay, Warren Buffett called it economic Pearl Harbor. Okay, so he meant what he meant. I put the picture here from Pearl Harbor. I don't know if you're aware, but Pearl Harbor was when the Japanese attacked the American Navy base, and this is when the US entered World War II. Okay, so Warren Buffett normally talks quite neatly, but he was saying that that was the economic Pearl Harbor. I've got here a little the way he describes it. If you want to listen to it, I think it's quite interesting. It's only quick. It's only 4 minutes or something like that. So if you want to listen to it, let's try. Let me know if you can hear it okay in a minute when it starts. Can you hear it okay? Is it loud enough?
No.
לא שומעים.
Okay, I'm going. So what I need to do is Okay.
Was that you can't lose.
10 years ago this week, the collapse of Lehman Brothers set off the deepest recession since
Now, was it okay now?
Yes.
Okay, great. So I'll just have to.
the Great Depression and led to a massive bailout by the US government. In its death throes, the firm's CEO, Dick Fulp, tried frantically to raise capital. One of the people he called, Warren Buffett. The world's most famous investor recalled Lehman's demise.
What people didn't understand going in was just the fact that everybody was a domino except the U.S. government. And they were very close together. So you couldn't stand outside and say, ha, 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 this, I'm protected against this.
Lehman Brothers filed for bankruptcy protection just after midnight. By far the largest bankruptcy ever in this country.
The one thing you don't have in those situations is time. Fear spreads extraordinarily fast. Absolute wildfire. Confidence comes back in the door one at a time, but fear wants to lead en masse. And we got to that point. It was something we hadn't seen before. Even the 1929 panic was nothing like this. The system had stopped. You have to remember that 35 million Americans had their money in money market funds, which at the start of the month of September, not one of them was worried about. I described it as an economic Pearl Harbor. I mean, except it was the economy that had gotten hit by an unbelievable force.
America's economy is facing unprecedented challenges. We're responding with unprecedented action.
You have to have somebody to say whatever it takes, and I'm going to do it. And fortunately, we had people who were, when they realized the gravity of what was happening, we were having a run on the United States, maybe a run on the world, and they stepped up.
And this morning, we've taken a number of powerful tactical steps to increase confidence in the system, including the establishment of a temporary guarantee program for the U.S. money market mutual fund industry.
The people who caused real trouble at the top of a few institutions, I would like to see them being punished perhaps even more, because it's true that in rescuing the institutions that needed to be rescued, that those people did not suffer quite as much disgrace and financial loss. But I don't think anyone that went through September 2008 thought, ha, 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 this shows that you can't lose. When I made that investment in Goldman Sachs, that was not just having confidence in Goldman Sachs. That was also confidence that we would not unnecessarily drive over a cliff without the United States government doing things it should do. We hadn't lost anything except we just froze. And you do freeze when you don't trust anybody else. We'll have others. Humans will continue to behave foolishly, and sometimes en masse. That doesn't change. We get smarter, but we don't get wiser.
Okay.
Ronnie,
Yes.
I didn't hear it good. Can you please put a link in the WhatsApp group so I can see it later?
Okay, yes. But also here, you've got the link here. I'll
Yeah, but here I need to copy it, but in the group I just need to click it, so it's easier.
Okay. But the thing, what any points that he was that you picked up? Anyone on things that he was saying?
I didn't hear good, so.
Okay. Well, he was talking. Well, he started by saying that it is like a domino. It was like a domino effect. When the only one at the end of the domino, the only one that was not part of the domino was the U.S. Government. Okay. But he talked about things that are very much. We see that in almost any crisis, and that is about fear. He said that fear took, fear spread very, very fast, okay? People lost their confidence very, very fast in the market. But
he also said that everything was frozen, like in the Corona. I think so.
That's it. That's what I'm saying. It's a lot of it. Things that you were saying. You can draw parallel with what we are witnessing now. Okay, because for example, the fear spreading very, very fast, and this is what we saw here at the beginning. Everything falls, but confidence for people to start gain their confidence. This comes slowly. People start to gain their confidence back quite slowly. Okay, and we can see that, after lockdown, for example, if I compare it to now, if not to financial market, but to the real happenings. Okay, until people will be confident enough to go to the cinema, to be in crowded places and so on. This takes longer time. So the recovery takes longer time. Okay. And indeed now, when they're talking now about the crisis now, the talk is what will the recovery look like? Will it be like, we went down very sharply? Will we come out very sharply as well? And the recovery will look like a V shape? Or will it be more like a U shape, where maybe we'll be down there at the low end for quite a while until we start to pick up like a U rather than just like a V? Okay, like the letter U rather than the letter V. Or some people even talk
like
about
in the
an L. Yes, sorry, Dudu?
It's looked like that in the Corona, it's looked like a V shape because all the market came back very quickly.
Yeah, but so maybe you're talking about the financial markets, but we don't know. It's still quite volatility with currency, volatility of currencies, volatility of stock prices go down, but then they go up and then they go down. So there's still uncertainty, and the real economy, okay? And the real economy will see what's happening with that, okay? And so hopefully it will be a V shape, but people now are trying to figure out whether it will be a V, a U, or perhaps an L, where you hang on at the bottom end for a long, long while, okay? For years. By the way, 2008, still in 2013, okay, it's kind of 5 years after, the gross domestic product in a lot of developed countries were not back to what they were before the eve of the crisis. Okay, so recovery normally takes quite a while. So that was Warren Buffett. Okay, we're still.
Do you know what was the largest drop during the Corona crisis?
The largest drop. I can't remember. I think I've written it down in one of the slides earlier. I can't remember. Quite tremendous.
I remember something like 7 or even 8%.
Yeah, I think
even
so.
more.
Something like that. Yes. Yeah. Yes. In a day. You're talking a day.
A day, of course.
Yes. And here you had 5 or 4 point something.
4.5. Yeah.
Yes. Okay. So Lehman Brothers collapsed in the middle of September of 2008. As I said, it was very heavily involved in mortgage, subprime mortgage lending. Okay, but the stock price started to fall well in advance, well before September. In other words, the market anticipated the problems. Stock market normally anticipates what's going on in the economy. Okay, so because what are asset prices? What are prices? Prices is the present value of future cash flows, if you remember from basic finance. Okay? And then when people all of a sudden think that future cash flow will not be as high as they previously thought, or that maybe the discount rate, שיעור ההיוון, maybe is higher because of higher risk, all these things mean that the present value, ערך הנוכחי, the present value of the price today is lower than what it has been. Okay, so the stock market is kind of looking to the future, okay, and reflecting today, reflecting what people are thinking today about about the future to come. So it fell during 2008. It recovered in August, for example. Why? Because they thought that maybe somebody will step in. There were a few institutions that it was debatable whether they will step in and save Lehman. For example, State Control Korea Development Bank was one of them. Later, Bank of America, Barclays. They thought maybe Barclays will come in and save the Lehman. It didn't happen. People thought that maybe Lehman was too big to fall, too big to fail. Okay, that surely the government will not let such thing happen.
Only the drop was in September.
The drop in the price, the stock price.
It says here that the collapse happened in September 15, 2008.
Yeah. Yes, that's when it was. Yes.
And the recover?
No, they didn't recover, but the price drop started well in advance. The share price started to go down, to fall, well in advance of September 15. Okay? But they thought that the government will step in and save Lehman. The government decided not to step in and not to save Lehman. Okay, so the bank no longer exists after mid-September of 2008. From that, it is something that started in the subprime mortgage market in the US. It soon spread globally. 2008, after the collapse of Lehman, it spread globally. Okay, from a local to a global crisis. I put here. This was the Economist. They had some of the really nice covers for the Economist during that time. Okay, obviously trying to saying that regulators and bankers tried to get and the governments and central banks tried to get the economy, the financial industry working again, trying to release kind of the pipes, as if the pipes were blocked, and they were trying to unfreeze the pipes, to let the financial market allow funds to go through the financial markets and go to industry, to companies, so that companies can invest, so the economy can recover. And the government tried to engage in quantitative easing, הרחבות כמותיות, trying to get money to the banks, to encourage banks to lend to individuals, to lend to companies, so that in that way to get the economy going. But it didn't work. So what the economists are trying to show here, for example, is that all the pipes were blocked. Okay, the financial system is the piping system for the economy. That's the role of the financial system. And it was just completely blocked, bringing about a credit crunch. Okay, מחנק אשראי. Okay, so credit crunch, nobody can have there's no credit is not available. It doesn't matter whether you are a good borrower or a bad borrower, the system, people lose confidence and banks do not want to lend. Okay, they don't care about the price that you're offering, about the rate of interest that you may offer, or how maybe trustworthy you are. They lose confidence in whether a bad firm or good firm, there's no credit available. Okay? And this, of course, brings about recession and slowdown of the economy. And this spread, it was called the Great Recession. Okay, האטה כלכלית, okay, recession, rather than depression. Depression was in the 1930s. The Great Depression, השפל הגדול. So it was, they gave it a different name, so as people don't think that it was as serious, but as you heard, some reckon it was worse. Okay. Here is another picture that, again, some pipes, and all the pipes are blocked, and you see here the regulators, the bankers, everyone trying to fix it, and impossible to fix. Some terms that were heard often during that period: a credit crunch, מחנק אשראי, credit crunch, a sudden reduction in the general availability of credit. As I said, nobody can get hold of credit, okay? Or tightening of the condition required to obtain credit. Okay? Credit becomes less available at any given interest rate. Okay, so you can't, it doesn't matter how much you're willing to offer, you won't be able to, as rate of interest, you won't be able to get credit. Sometimes they talk in that context also of credit rationing, okay, קיצוב אשראי, limiting the lenders of the supply of additional credits to borrowers, even if the latter are willing to pay higher rate of interest. And what we also heard, we also saw in this current situation, flight to safety. Okay? All of a sudden, people go back to the US dollar, and all of a sudden you see the US currency appreciating again. Or you see people going for gold. Okay, people don't want to hold on to risky assets. They want to they want to hold what they think, what they consider as safe havens. Okay, as assets that are safe, that are solid, even if they offer lower returns. Okay, and we'll see that in a bit. But before that, during 2006, the rate of interest in the US were very, very low. People were searching for investment opportunities. They were looking for investment where they can put the money to earn high returns, high rates of interest, high yields, high returns. They were searching, they couldn't find it in the US, so they went to emerging markets, started investing in emerging markets. Maybe a bit more risky, but they consider it, okay, at least we can earn decent return. Okay, what you can't in the US. And this is actually what pushed to the subprime mortgage, because they thought, okay, let's be innovative. Let's make up new instrument that maybe will be safe, but also offer high return. Okay, and that is the reason why the subprime mortgage market was flourishing so during coming up to 2008, during 2006, 2007, and so on. But as soon as trouble began, everyone went back to the US dollar. So funnily enough, even though the crisis started in the US, as soon as it spread globally, the US currency appreciated back again. Okay, it dropped, but then it appreciated back again because people were seeing the US dollar not as the US dollar as such, but as a reserve currency, something that you can invest and it will be nice and safe. Okay, and that's precisely what happened. Okay, we see here the rate of interest. This is the LIBOR. LIBOR is a London interbank offered rate. Okay, it is an average of interest rate at which banks can borrow from each other. Okay, so it is the estimates each bank on every morning in London. They're asking representatives from the banks, at what rate do you think you could borrow if you wanted to borrow today? At what rate of interest could you borrow from the banking community? Okay. And this is LIBOR, and there's a very important rate of interest because it determines a lot of mortgages and everything is based. It is like a base rate on which a lot of other contracts and debt contracts are based on the LIBOR. So for example, you say, okay, I'm taking a mortgage, I'm offering you a mortgage at LIBOR plus 3%. So whatever LIBOR is, plus 3% on that, okay, or LIBOR minus or whatever. Okay, so it is a very important rate of interest. And you can see here, you see the peaks, it just jumped highs of the LIBOR market. You see here, for example, it was around the 2% and then jumping to 6.6%, over 6%. When did that happen? This happened on September 16. Is a problem with AIG. Here you see what happened on September 15th, Lehman's collapse. Here AIG, the insurance company, was next in line to suffer greatly from what happened in the financial arena. Okay, here the government did help. And here you see again, so you see the peaks where things are getting really bad, where something massive, something acute is happening, something severe is happening, like the collapse of Lehman or AIG near collapse. And you can see how the rate of interest immediately jumps to reflect that risk. Okay, so this is why we say that rate of interest reflect the risk, the risk of the borrowers. Okay, and you can see here with the Libor, what's going on with the Libor. Okay, this is the US Libor, because you're given it in very many currencies. You have the Libor, but this is the US. Okay, so that was just an overview of what happened, and what I'm going to do now is to delve into that crisis, and let's delve in and try to analyze what happened and what were the causes that bringing about that financial crisis. We're talking 2008. Okay? So we're going to look first, analysis of the origins of the crisis. We'll have a look at about 6 factors. Possibly we will not finish today, but we'll have a look at 6 factors and see how each of those factors contributed to what happened, what brought about the global Great Recession of 2008. We'll have a look at the implications, השלכות, implications, and insights to the note of what happened, and the list of reading, which is at the end. First of all, I'm going to give you the various factors that we're going to have a look at. 6 factors, as I said, and we'll have a look at each of those. Okay, some in more depth, some in less, but we're going to cover all of those. The first is the financial community. So the financiers. We're talking here about the financial community, about the banks and the way banks behave, and the financial community, the way financial community behaved, investors and so on. And we're going to look at the very complex, very sophisticated financial instrument. Okay? All the sophisticated financial instrument which banks created. And why did they create such fancy financial instrument? Can anyone think?
To make money, profit.
But why? Why couldn't they just have the old, equities, bonds, the options, let's say, the normal stuff? Why going into and start creating very, very complicated financial instruments?
Hide maybe information inside. Like, I don't know if they thought about it like this, but
yeah. Well, what? Yes.
Maybe because they offer low rates if they are secured.
Precisely. As I said previously, the rate of interest in the market at that time were very low. So you couldn't have, if you just invested normally, there wasn't much return to be made. Okay? Low risk, but also low return. What they wanted is to try and spice it up a bit, because investors started to look elsewhere. They started to look in emerging markets, looking for good investment opportunities there, because there wasn't much in the US, because the rate of everything, the rate of the returns were not very high. So they wanted to create something that will offer investors better opportunities to make money. Okay. Also, if you look at it differently, another way of looking at it is, and you can think this is a capitalist system trying to, perhaps you can think of it that way, although a lot of people were criticizing the banks and the financial industry. But what they did was actually to allow people that before had no chance of getting a mortgage and buying their own house. Okay, people that were poor, people that were unemployed, people that didn't have assets, securities to give, collateral to give. Okay, but they made it so those people could also take a mortgage and buy the house, kind of fulfilling the American dream. Okay, so in that sense, and this is why even today, when we're talking about those sophisticated financial instruments, even in Israel, the idea is not to ban those. It's just to maybe regulate them a little bit better than what has been done, the way that it has been done in the past, had been done in the past. Okay? So we'll talk about it, but Alan Greenspan, the head of the Federal Reserve, in the past, he called the behavior of investors and the market. He described it as irrational exuberance. When he talked about that, when he made that term, when he coined that term, irrational exuberance, התלהבות לא רציונלית, okay? He was talking back in the end of the 1990s during the dot-com bubble, if you remember. Okay, when the dot-com, when the high-tech, there was a crisis in the high-tech sector. He talked about התלהבות לא רציונלית, irrational exuberance. When investors just getting, prices going up and up and up, everyone get excited over the prices, and everyone know that, sooner or later something will happen and the whole thing will collapse. Okay, the bubble will burst. Okay, so that's number one. Number two are the rating agencies. Rating agencies, חברות הדירוג. Okay? These are, for example, Moody's, Fitch, maybe you know those rating agencies. Does anyone know what rating agencies do?
No.
Do?
What did you say?
I ask, what do rating agencies? דירוג אשראי, what do they do?
They rate, חבר'ה, תהיו בשקט. The rating agencies, they rate how strong is the firm.
Yeah, so they give like rating, for example. Can you give us an example of a rating that they may give?
They give, let's say for a bank, A rate, A plus, A plus plus, something like this.
Yes. Okay, so they give, Merav, so they look at the institution, okay, and they rate the institution, they look at the institution, let's say at the bank, okay, or maybe the bond of the bank, the איגרת חוב of a bank, and they'll give it a rating to say how much, how good it is, what is the quality of that debt. Okay?
Yes, I understand, but they also did that for private people who take loans, mortgage?
No. What we're talking here, what they did is they used to give, well, they still are giving credit rating to institution, to financial institution. The problem was that they are giving, for example, if they rate, say, Barclays, okay, Barclays Bank, they give a rating to Barclays, to the bond that to the instrument that Barclays, debt that Barclays issue, okay, for example, but who pays them to give that rating? It's Barclays that pays them. So it is the bank pays them to evaluate the riskiness of the bank. Okay, so you can see that, you see the problem, the conflict of interest that exists in their role, in what they're doing.
Understand now.
That was problematic. So banks used to pay them, for example, and then used to rate those banks, and obviously they used to give them high ranking. Okay, and that caused a lot of problem because people thought that they were high quality, low risk, and in the meantime they were collecting more and more debt until they weren't so stable. Okay. So the rating agencies, a blaming finger was pointed at the rating agencies during and after the crisis. Okay. By the way, these are private companies, Moody's and Fitch. They're not, you would have thought that maybe it was a government agency or something that will do that, or somebody that is objective, but actually it's not. It's a for-profit organization that live from the income provided to them by those that they rate, those that they evaluate. Okay, so it's problematic. Then number three, our actor number three is central banks. Okay, for example, a lot of people criticize now the decision of the Federal Reserve, the U.S. Central Bank, the Fed, to bail out, not to bail out Lehman. Indeed, after, when AIG, the insurance company, was nearly failed, it did help it. So at the end of it, the central bank, the Fed, had to throw a lot of much more taxpayer money than it would have done, perhaps. This is what some people argue now, if it was to bail out Lehman.
Ronnie, did the bank only not bail out Lehman, or other banks also?
No, Lehman. It let Lehman fall, but that was a big shock because nobody thought that would happen. And once Lehman failed, you know, like what did he said? Warren Buffett. He said it was like a run on the U.S., like a run on the bank. A run on the bank is when people lose faith in the bank, lose faith that the bank will be able to, if you have your money in the bank, okay, the underlying assumption is you assume that if you want tomorrow morning, you want to go to the bank and draw out all your money, you can do that, right? You know that you can do it. If your bank account is with a Poalim, you know that tomorrow, if you want, you can go there and draw all your money out. A run on the bank happens when people stop believing this. When they think, if I don't go now and pull my money out, the bank may not be able to give me my money back because maybe the bank will not have that money. And then people start to run to the bank and wanting to withdraw the monies. This is when you lose trust in the system. Warren Buffett described what happened after Lehman's fall is a run on the US, a run on instead of on the bank, on the US. Okay, people now talking with regards to the coronavirus. What was the problem with the corona? Why did the government wanted to put everyone in isolation, the social distancing? What was the fear? What would happen if everyone? They say, okay, if everyone, had. Pardon?
Health. It was health.
Health, but what precisely with the health? What was where did you thought? What was the big fear?
להדביק אחרים, לא זוכרת.
Okay, so people catching it, yeah, but the problem is that what they were thinking, so we want to reduce the rate of infection, of people getting the virus spreading, because the hospitals will not be able to cope with a massive amount of people, okay? In other words, the fear was that there will be a run on the hospital. Everyone will come to the hospital because they were all ill, all need a breathing machine and whatever, and the hospitals will just not capable of dealing with so many people. So in other words, a lot of people compared it, if you read the papers, compared what happened with the coronavirus to a run on the hospital. That was the big fear. And this is why they said, okay, let people get the virus, but get it slowly. We want to flatten the curve, right? That's what I was talking. להשטיח את העקומה, to flatten the curve, so that not everyone will need hospital at the same point in time. And this is like a run on the bank, or a run on the hospital, or a run on the US. Okay, when everyone all of a sudden lose the confidence and the need and want to draw the money out. So it was a decision of the central bank and other steps that the central banks took that we will have a look at. Number 4, a global saving glut. Okay, these are all things that it's good to hear those terms, because those terms often you'll hear people refer to them with regards to the economy and so on. Okay, so irrational exuberance, when people try to describe that prices in the stock market go up and up for no apparent reason, a part of irrational behavior. Okay? Global savings glut, היצף חיסכון גלובלי. And this is also an element that were said to maybe make the ground for the conditions of the crisis to develop. And we'll have a look at that. Okay. Number 5 is a long period of stability. They called it the Great Moderation. תקופת היציבות הגדולה. Okay, the Great Moderation. Up to 2008, things were very, very calm. Okay. Everything looks very, very stable. People were almost imagine that there is no more risk, that risk has evaporated, risk has disappeared. Okay, you can invest in risk in whatever you want, and risk will not materialize. There was no risk. It's rate of the inflation level was very, very low, and people thought we came into different times where we don't have the fear of instability. So when people want to invest in let's say you think that rate of interest is very, very low now. Okay, the rate of interest, הריבית נמוכה. So you want to look for something with a bit more risk because you want to earn higher return. So you go and look for assets that are a bit more risky. But if you think that the conditions in the market are unstable, that okay, today the rate of interest is low and inflation is low, but tomorrow maybe things will look different. Maybe inflation will go up all of a sudden, and maybe that will create havoc in your investment. Under such circumstances, people, even though now you think, okay, I'll go in and invest in something, in things, if you think that there's instability perhaps, then you will not want to take much risk. But when you think that not only it is a good environment to make an investment, but also that this environment, this comfortable environment is going to stay that way, then you are much more willing to try different approaches and to make investment. And this is what happened during that period. Okay, they call it the Great Moderation, תקופת היציבות הגדולה, Great Moderation. Okay. And then number 6, short-term sources to fund long-term lending. And the greatest example of that is the English mortgage lender, Northern Rock. Northern Rock was, I think, one of the first to experience a run on the bank. You saw it well, Northern Rock had a lot of, it was lending a lot of mortgage, engaged much heavily in mortgage lending. It was also holding a lot of pensioners' money. A lot of pensioners put their money in that institution. And because it went into trouble, all pensioners, British, English, all pensioners, all flocked to the bank trying to knock on the door, wanting to take the savings out, because they were frightened that all the savings, all the pension money will disappear because Northern Rock will fall. And what happened at Northern Rock was that it was giving mortgage loans, okay, loans for people to buy the houses, mashkanta, mortgage mashkanta, okay, it was giving mortgage loans to people. Now, when you give a mortgage loan is for the long term, right? You have it for 30 years to pay your mortgage, okay, 20 years, 30 years, long term to pay your mortgage. How did the bank finance those mortgages, those lending? It was borrowing itself, but it was borrowing very, very short term. So it was borrowing for a short term, הוא לקח הלוואות לתקופה קצרה, and used that money to lend it on to people that wanted to take mortgages for the long period. אז הוא לווה קצר והלווה ארוך, okay? Why did he do that? Because the short-term rate of interest were very, very low. So it was better to keep borrowing short-term because short-term rates were low, okay? And then giving it as mortgages, financing, use that money to finance long-term mortgages that it was giving out. Why did he do that? The Great Moderation, he thought that the low rate of interest, the short-term low rate of interest will stay that way, will stay stable. But then it didn't. But then all of a sudden they went up. And when they went up, all of a sudden Northern Rock found it very, very difficult to keep financing its mortgage markets. Okay? And this is just one simple example of one institution, but it was general that this behavior of short-term sources to fund long-term lending. We always say in investment, you have to match the timing, the length of time of your asset with your liability. לעשות התאמה בזמן, בין הנכס לבין ההתחייבות. Okay? But here there wasn't this matching of time was not done. And it caused trouble, caused problems. Okay. Any questions?
So you talked about the banks that did it, right? They took the short-term short and gave to people a long-term lending.
Precisely, yes. So the banks were borrowing money from other banks, say from American banks. They did it. They borrowed from American banks, okay? And they borrowed for short term, let's say for 1 month, for 3 months, for short term.
But after that short period, they also gave back the money, and then again
talk again, precisely because you need, it's a cycle. Yes, you need to keep replenishing your capital. Okay, so you keep lending on a short-term basis, and again and again and again and again. Okay, to do what? To give that money that you raise, to give that to people, your customers that want to buy to buy a house, that want a mortgage.
כמו לגלגל חוזה, כמו לגלגל...
Precisely, גלגול של החוב.
איך אומרים את זה באנגלית? גלגול חוב?
שכחתי שנייה, אני תכף אזכר. Okay? Roll it over. Roll the debt over.
Ronnie, but who did that? All the banks in the US?
Here we talked about Northern Rock. Northern Rock was a British institution. Okay? But they did it. A lot of banks did it, and a lot of institutions did it all over. A lot of European banks actually did that. Okay, when they went to the US and borrowed money from the US, and then they used that money maybe to lend it to their customers, or maybe even to buy those sophisticated in number one, those sophisticated instruments that the banks were offering. So they were borrowing money and taking that money, and with that money, investing all of it in the very sophisticated financial instrument that the banks were devising, were bringing out. And we'll see it in a minute. We'll see those sophisticated financial instruments in a bit. Okay. So what I did here was just to give you an overview of all the various factors, 6 factors in fact. And what I want to do now is to delve more into each of those in turn. Okay, that's the idea. So we start with number 1, irrational exuberance, התלהבות בלתי רציונלית, and complex financial instrument. Okay, and here is Alan Greenspan, who coined that term, irrational exuberance. Okay. So first of all, irrational exuberance, Alan's Greenspan, irrational exuberance, a warning, azhara, that the market might be overvalued. azhara שאולי השוק גבוה מדי, overvalue מוערך ביתר. Okay, if it is overvalued, it is likely to fall at one point or another. Okay, this is a phrase used by the Fed chairman, Alan Greenspan, in a speech during the dot-com bubble of the 1990s. If you remember the dot-com bubble, when dot-com companies, do you remember that? Have you heard of it? Yeah, it was all the dot-com...
During the 2000, end of...
that's true, yes. The bubble burst during the early 2003, I think, or whenever it was. Okay? But this is what he was saying. Look, clearly, sustain low inflation. We said that during the Great Moderation, inflation was very low. Sustain מתמשך, sustain low inflation implies less uncertainty about the future. אינפלציה נמוכה, מתמשכת לאורך זמן, אומר יש פחות אי-ודאות לגבי העתיד. And lower risk premiums imply higher prices of stocks and other earning assets. Okay, lower risk premium if we think that there's less uncertainty, פחות אי-ודאות. Okay, it means that risk premium, פרמיות סיכון, will be lower. Okay, the discounting that when we value an asset, כשמתמחרים מחיר של נכס, when you value an asset, the discount rate, שער ההיוון, the discount rate that you will be using will be lower now because you perceive that it contains less risk, which means that the asset will be more highly priced. Okay? So lower risk premium, פרמיות סיכון נמוכות יותר, imply, אומרות, higher prices of stocks and other earning assets. מניות יהיו גבוה, המחיר שלהם יהיה גבוה יותר, בגלל שאנחנו חושבים שיש פחות סיכון, ולכן ריבית ההיוון היא נמוכה יותר, כי ריבית ההיוון משקפת סיכון. But how do we know when irrational exuberance has unduly escalated asset values? איך נדע מתי ההתנהגות בלתי רציונלית, התלהבות בלתי רציונלית, העלתה את המחירים יותר מדי, הורידה את פרמיית הסיכון יותר מדי. The risk as if disappeared. People thought there was no more risk, okay? Which then becomes subject to unexpected, לא צפוי, and prolonged וממושך contraction, התכווצות, as they have in Japan over the past decade. Okay? That was his irrational exuberance speech. Okay?
Ani?
כן.
Low inflation also implies a recession because people don't buy.
Yeah, but I mean that's when for too long. But I mean not necessarily. I mean but that did not happen at that time anyway.
Okay.
So it was like stable. You know, I mean, okay, inflation can go very, very low. But I mean, if you have low and stable inflation, not rocket high inflation, but nice stable inflation, I don't know, 2%, 3%, then this is where normally central bank wants to aim at. Okay, that you have inflation, you have some inflation, because indeed you are correct that if you have too much of you have deflation at the position of deflation, not inflation, but deflation, people don't want to engage in buying anything. Because why would you buy? Tomorrow it will be the cheap. Why would you buy a car today? Wait for tomorrow. Tomorrow the car will cost less. Okay? Which but then nobody spend. And of course, as you said, brings the economy to a halt, to a stop. Okay? So you're quite right. Deflation is as much as we don't like inflation, high inflation because of uncertainty, we don't like deflation. We don't like when it is too low, because then people don't want to participate in the economy, because you want to hang on, to wait. And not buy today, buy tomorrow. It's better to buy tomorrow. Tomorrow the price will be lower, okay? Which is problematic. This is why central bank normally aim at, 2%, to have inflation, but to have it controlled, okay? But yeah, good point.
Okay.
Now, let's look now. So we talked about the התלהבות בלתי רציונלית, okay? Let's have a look now at the other part that we talked about when we talked about the financial system, our factor number one. And we talked about the complicated new financial instruments, okay? And I'll give you kind of I'll go into that in a bit more detail later, but just to give you an overview. What we're talking about is we're talking about mortgage-backed securities that were made by collecting a lot of mortgage loans, okay, pooling a lot of mortgage loans, pulling them together and creating a bond kind, an instrument that you sell on the market, where that bond, the payment on that bond are backed by the payment that people on the mortgage lenders pay you. Does this make sense, or shall I say it again?
Again.
Again? Okay, I'll say
they
it.
are getting like sustainable dividend, but not a dividend, but the money of the mortgage, right?
Well, what it is like, say that you collect, let's say the bank gives out mortgage loans, okay? So he give it, I don't know, David, it gives you a mortgage loan, and to Dudu, and to Nizar, and to Merav, he gives all of us, and Tal, I'm the bank, okay? I've given all of you mortgage loans, okay? הלוואות לקנות בית חלומותיכם, okay? Now, you have to pay me the interest rate, right? You have to pay me back the interest on the loan, right? What I do is I take all those assets, it's your obligation, זה התחייבות שלכם, but it is my asset, נכס שלי. כל ההלוואות משכנתא האלה זה נכס שלי בתור בנק, okay? Because I'm expecting cash flows to come. You all are going to pay me back.
And the bank sell it.
Pardon?
And the bank sell it.
And the bank sell it. So the bank takes all those loans, package them together, and sell it as a instrument. That instrument, it sell it to the market as a bond. Geret Chov, say, okay. Think about it like you sell it as a Geret Chov, as a bond, where the payment, the bank now has to pay interest because the bank was the one to issue the bond. The payment that the bank will make, where will the bank make that payment? The bank will take the payment that you, David and Dudu and Nizar, that you've given, you paid your mortgage. I'll take all this payment, and I'll use those streams of cash flow, I use them to make payment on the bond that I have issued. Does this make sense, Merav? Or not yet? If not, I'll say it again.
Yes.
Does it make sense to say it again?
Okay.
Again, okay. I'll say it in Hebrew, okay? Maybe it will be clearer. תחשבי שכולם אוספים, אנחנו אוספים, אני הבנק, ואני נתתי הרבה הלוואות משכנתא לכולם. נתתי פה לטל, ונתתי לדודו, ונתתי לך, נתתי לכולכם הלוואות, אוקיי? מה אתם צריכים לעשות? לכם יש התחייבות, יש לכם לקחתם חוב, הלוואה, ואתם צריכים לשלם לי ריבית, נכון? אתם צריכים להחזיר לי את החוב, נכון?
כן.
אוקיי. What do I do now? מה אני עושה עכשיו? אני לוקחת את כל ההלוואות האלה, מאגחת אותם, לוקחת אותם, pull it together, מאגדת אותם ביחד, ועכשיו אני אומרת, אוקיי, עכשיו אני ינפיק אגרות חוב, אוקיי? אני אקח הלוואה, אני ינפיק אגרות חוב בשוק, אני אנפיק איגרת חוב, בונדס, להרבה משקיעים בשוק, אוקיי? המשקיעים ייתנו לי כסף, כי הם קונים את הבונד שלי, את האגרות החוב שלי, איך אני אשלם להם אחר כך את הריבית? אני צריכה לשלם ריבית. הריבית, אני אשלם להם את ההחזר על החוב מתוך ההלוואות שלכם. אתם צריכים לשלם לי, להחזיר לי את ההלוואות, את הכסף הזה אני מאגחת, כן, פולינג, ומתוך הכסף הזה אני אשלם את אגרות החוב שלי. אוקיי? זאת אומרת I issued bonds, אני מנפיקה אגרות חוב בשוק, בפייננשל מרקט, בבורסות, והכסף, כדי לשלם את הכסף הזה, אני משתמשת בתשלומים שאתם עושים לי, שאתם נתתם לי. כלומר, what I did was to take something that is off the stock, off the market, and made it into a financial instrument. לקחתי משהו שהוא היה לא בשוק, לא נסחר בשוק, והפכתי את זה למשהו סחיר. כי עכשיו יש לי את הבונד הזה, את האיגרת חוב הזאת, ואני יכולה למכור, אני אימפקתי את זה לך, את מכרת לטל, וטל מכרה לניזר. אוקיי? זה כבר סחיר.
אוקיי.
Okay, does this make sense now?
כן, yes.
This is why we call it mortgage-backed security, because there are securities, bond, that are backed, מגובות, by mortgage loans. מגובות בהלוואות משכנתא. אז זה בונד, משהו סחיר, שמגובה בהלוואות משכנתא שהבנק נתן. Okay, somebody wanted to say something?
Yeah, I just want to add, because they were backed with the mortgage, they were rated very high.
Yes, yes. Precisely. So what there was, the idea was, and this is very, very important, the video, quite right. The idea was, we'll pull a lot of mortgages, ניקח הרבה הלוואות, not only from one city in the US, we'll spread it from many cities all across the US, okay? And because not everyone are likely to fail together, then we are reducing the risk of those loans. אנחנו לוקחים מכל מיני מקומות, אנחנו מפזרים את הסיכון. אנחנו בונים תיק מפוזר היטב. כי אנחנו לוקחים את ההלוואות משכנתא שאנחנו מאגדים ביחד, שאנחנו מאגחים, אנחנו לא לוקחים רק ממקום אחד, מעיר אחת. אנחנו ניקח את זה מהרבה ערים בכל רחבי ארצות הברית, ולכן אנחנו מפזרים את הסיכון. יכול להיות שמישהו אחד במדינה אחת ייפול, מדינה אחת יהיה הרבה נפילות, אבל זה לא קשור למה שיקרה במדינה אחרת, או בעיר אחרת. And that was the idea. And for that reason, you can even give loans to people that are more risky. אפשר לתת את ההלוואות לכן, אפשר לתת הלוואות גם לאנשים שהם יותר מסוכנים, כי אחר כך אני אקח את כל ההלוואות האלה, ואני אפזר את הסיכון, כי אני אקח אותם ואני אעשה להם pooling together, ומזה והכל ביחד יגבה לי את האגרות חוב שאני אנפיק.
רוני, אבל כל זה קרה בגלל שהליימן ברודרס כאילו הם נפלו.
No. We're talking much before Lehman Brothers now. We're talking about what I did was, first of all, just so that you understand, what I did was, first of all, I gave you an introduction. And in my introduction, I started from the end, more or less the end, when Lehman failed in September 2008. That was the peak of the thing, okay? That was the kind of the end. From then on started recovery, you can say. Very, very long-winded recovery, but recovery. But I'm talking what happened. How did we get there? How did we get to the situation that the US government had to bail out AIG and was considering bailing out Lehman? How come that all the financial industry failed? So we're looking now at what were the reasons, what were the parameters, what were the factors that contributed to the problems that came to the boil with Lehman Brothers collapsing on mid-September of 2008.
Ronnie?
Yes.
Can you explain the circles, מעגלים שהיו on these bonds? There were
I'll speak.
Couple of
Yes, we'll speak about them. I'll show you even a diagram so we see what happened precisely. I've just given you an overview of those, okay? What I'm doing is because it is quite complicated, I'm just giving you, so each step I'm going a bit deeper, okay? So now you understand more or less the idea of איגוח, securitization, איגוח, okay? We're taking something that is not traded on financial market, כמו הלוואות משכנתא, שזה לא דבר סחיר. אי אפשר להעביר את זה אי אפשר את הלוואת משכנתא שלך, זה את מול הבנק, אוקיי? אבל זה לקחת את ההלוואה שלך מול הבנק, טל, ולהפוך אותה, ולקחת גם את זאת של מרב. לא משנה, גם לי אין, אבל...
צוחקת, אני חושבת.
אבל לקחת את שלך, ולקחת את של מרב, ולקחת את של דודו, ולקחת את שלי, אוקיי? ולהפוך אותם למשהו סחיר, לאסוף אותם, לעשות מהם פאקג' אחד, ואז אחר כך, על הבסיס שלהם, להנפיק משהו שהוא כן סחיר. אוקיי? זה כל היופי שבזה, זה כל ה-innovation שפה. ותוך כדי להקטין סיכון, בגלל שאנחנו מפזרים את ההלוואות שלנו על פני הרבה לובים. ואז אפילו אם הלובים האלה מסוכנים, אני הורדתי את רמת הסיכון, בגלל שאני פיזרתי את זה על פני הרבה אחרים, וההנחה המוטעת הייתה, שהם לא ייפלו ביחד, שלא כולם פתאום לא יוכלו לשלם את המשכנתות שלהם. אוקיי? So then they started, what happened was that they started with, okay, so we have here, mortgage loans in the US marketplace are normally categorized in increasing order of riskiness. The least risky, הכי בטוחים, הפריים. אוקיי? זה המורtgage loan prime. Very, very secure people that you know that they're going to, that the chances that they will default on their loan is quite remote. Then you have alternative paper, a bit more risky. Maybe those people you know, you can give them a loan, but maybe they will not honor their obligation. And then you have the very, very risky ones. Those are the subprime lenders, borrowers. הלווים הכי מסוכנים, subprime. This is where that's why this is where the name for the subprime crisis comes from, because of subprime borrowers, לווים מסוכנים. They were giving a name. They were calling them ninja. Okay, I put here a picture of ninja, but ninja. Why ninja? No income, no job, no assets. Okay, they didn't have a job, they didn't have any income, and they didn't have any assets. They were very, very risky customers, borrowers. Yet they started, the banks started to dish out loans to those people. Yes, Ken, Merav.
No, it's everything okay.
Okay. So, yeah, what I'll do now, it's very heavy. We're going to finish in a minute. But before we do, I want you to listen to this clip, okay? This clip is a funny clip. It's two comedians, the British comedian, okay? But why I like it is because in a humorous way, בדרך הומוריסטית, in a humorous way, they explain how the banks behaved, okay? So they criticize the way that the banks behave, that they were dishing out, they were going around, sending mortgage sales people, אנשי מכירות, okay? To try and get as many people, borrowers. You know how the banks sometimes now, during the corona, I don't know if you had it, I had it from a lot of phone calls from the banks. Do you need a loan? צריכה הלוואה? Okay, I don't know, did you have that? Did you have it now? People calling you asking if you need a loan now because people thinking that maybe you're out of a job now and stuff? Anyone?
Yes,
Yeah?
yes, me. Yes.
I had quite a few times the bank calling me. So the same things. The banks were sending the sales personnel to those people that were quite the ninja kind of customers and try and offer them mortgage loans. And this is what these two people... Yes, sorry?
They try to push you a loan even if you don't need
Precisely,
a loan.
yes. And so they describe it in that little comical clip that we'll see. They came to this, they're describing this black man sitting on the porch, you know how they do in Alabama by their house about to fall apart, okay? And they say, do you want to buy your house? I'll give you a loan to buy your house, okay? And they were collecting those loans, ייקחו אותם, make them into securities, sellable securities. So they were collecting a lot of them. And these two people now, the comedian here, they describe it in a humorous way, but in a quite precise way of what happened. It's quite a precise description of what happened, only in a humorous way. Okay, I'll start it. I'll do it. It's with the subtitles. Also, the subtitles is a bit funny sometimes. I don't quite get it, but still, maybe it will be easier for you than to listen. Okay, so I'll try that. Where is it? Here. Okay, so we listen to that. It's quite funny, but also try to understand what they're saying because it's quite precise. And then we'll finish for today, and then next week we'll continue from where we started today. Okay, because it was I appreciate that it is quite heavy class. Can you hear okay? Or not very good?
No, I can't hear.
No.
Okay, so let's do again. Okay, I think that it will be, this is quite not very loud, but then it becomes better. And I'll try to do here as well.
John Bird and John Fortune.
Is this better? Was it better now?
Yes.
Okay, great.
George Parr, you are in an investment bank.
I am.
Yes. And as such, you have your fingers right on the pulse of the financial market.
Yeah, very much so, yes.
And during the summer, there's been a great deal of turbulence and volatility
in the market. Yes, tremendous. Yes, tremendous.
תנודתיות.
What has caused that?
Well, you have to remember two things about the markets. One is that they are made up of very sharp and sophisticated people who these are the greatest brains in the world. And the second thing you have to remember is that the financial markets, to use the common phrase, are driven by sentiment.
What does that mean?
What does that mean? Well, things, let's say, are just going along as normal in the market. And then suddenly, out of the blue, one of these very sharp and sophisticated people says, "My God, something awful is going to happen. We lost everything. Oh, my God, what are we going to do? What are we going to do?
Shall I jump out of the window?
Shall I jump out of the window? Exactly. Let's all jump out of the window.
Oh, sail.
We've lost a sail. Yes, precisely. Yes, precisely. And then a few days later, this same sophisticated person said, I think things are going rather well. And everybody says, I agree with you. I think we're rich. We're rich.
We're rich.
Yes.
Bye.
Yes. And that's what we call markets.
Yes. Surely we are exaggerating just a bit.
Well, I don't know. I mean, in August, middle of August this year, when the market absolutely plunged in London, a well-known city firm, State Street Global Market, issued a statement in which it said, and I quote, "Market participants don't know whether to buy on the rumor and sell on the news, do the opposite, do both, or do neither, depending on which way the wind is blowing," unquote.
Yes, and this is the kind of rigorous analysis the companies will pay huge salaries for.
Yes, exactly. And a few days later, when the markets have gone up a little bit, the senior equities advisor on ABM Ambro Morgan said, and I quote, "We're back to happy days again."
Well, no price is too high for that kind of mature wisdom, is it?
This sort of people are paid millions of pounds in bonuses.
Yes, of course. During this summer, there have been actual causes behind the volatility in the markets, haven't there? I mean, specifically and especially in America, they're granting vast numbers of mortgages to people who can't afford them on properties which are diminishing in value.
Well, it's a so-called subprime situation. Yes,
the subprime
market.
Yes. How does that work?
Well, imagine, if you can, say an unemployed black man sitting on the crumbling porch somewhere in Alabama in his field desk, and a chap comes along and said, "Would you like to buy this house before it falls down? And why do you let me lend you the money?"
And is this chap who says this, is he a banker?
Oh, no. He's a mortgage salesman. His income depends entirely on the number of mortgages that he can arrange.
So his judgment to arrange mortgages is completely objective.
Completely objective, yes. Absolutely.
Yes. And what happens next?
Well, then this debt, this mortgage, is debt, is taken, bought by a bank and packaged together on Wall Street with a lot of other similar debts.
Without going into much detail about what is actually...
Without going into any detail.
זה האיגוח.
And so this is put into a package of debt. And then it's moved on to Wall Street. This is extraordinary what happens then, that somehow this package of dodgy debts stops being a package of dodgy debts and starts being what we call a structured investment vehicle.
And SIV?
And SIV, exactly.
Yes, I see. And then someone like you comes along and buys it.
I buy it, yes, and then I will bring up somebody in Tokyo and say, "Look, I've got this package, do you want to buy it?" And they say, "What's in it?" And I say, "I haven't got the faintest idea." And they say, "How much do you want for it?" And I say, $100 million. And then they say, "Fine, that's it." And that's the market.
And presumably, this package, I mean, that kind of thing can happen several times to the same package.
Possibly, yes.
And every time it does, of course, then you or someone like you will get a fee and a markup
and a profit.
And so
we can't expect to do it for nothing. It's hard work.
In view of the fact that in these packages there's a lot of dodgy debt, what is it about it that attracts the financial, risk taker?
Yeah, well, because these hedge funds, as they're called, which specialize in these debts, they all have very good names.
You mean they're responsible companies?
No, I don't. It's nothing to do with their reputation. They have actually very, very good names. The names I think are very good. I'll give you an example. There's a very well-known American Wall Street firm called Bear Stearns, who have two of these hedge funds which specialize in these mortgage debts. And they lost so much money, lost so much of its value, that Bear Stearns announced that they would have to put in $3.2 billion into one of the funds to try and keep it afloat.
$3.2 billion?
3.2 billion, yes. And even then they said the investors couldn't get any money out of it and they were going to let the other fund go. But one of these funds was called high-grade structured credit strategy. And the other was called the high-grade structured credit enhanced leverage fund.
Well, that sounds very good.
That's good, isn't it? Yeah.
Very trustworthy.
This is the magic of the market. What started off as lending a few $1,000s to an unemployed black man in a string vest has become a high-grade structured credit enhanced leverage fund.
I like the sound of it.
It is good. It sounds very trustworthy. I mean, it's got good words in it. It's got words like high.
High is good.
High is good. Yes, better than low, anyway. Isn't it?
Yes, absolutely.
And structured is another good word. Very good. Enhanced.
I love enhanced.
Enhanced is very.
I mean, I'd buy anything if it said enhanced.
Absolutely.
Yes.
It might have been different if it said the unemployed black man in the string vest fund, but
yes, because then alarm bells might start to ring. But despite these very plausible names, surely the reality is that the people that lent all this money have been incredibly stupid.
Oh, no. The reality is that what was stupid is that at some point somebody asked how much money these houses were actually worth. I mean, if they hadn't bothered to ask that question, then everything would have gone on as perfectly normal. But they, unfortunately, they did.
I see, but now you see, people are saying the crisis is likely to turn into a financial meltdown. I mean, can that be avoided?
It can be avoided, provided that governments and central banks give us, the financial speculators, back the money that we've lost.
Isn't that rewarding greed and stupidity?
No. It's rewarding what the Prime Minister Gordon Brown called the ingenuity of the market.
See, and
we don't want this money to spend on ourselves. We want this money just to go into the market so that we can carry on borrowing and lending money as if nothing had happened without thinking too much about it.
Yes, but if the worst came to the worst and you didn't get this money, what then?
Well, then there'd be another market crash. And then I would say to you what people like me always say, that it's not us that will suffer, it's your pension fund.
Thank you very much, George Parr.
Pleasure.
Okay, did you manage to? Was it too difficult to understand? Marav?
Yes, I know this video because I saw it in another course.
Oh, this specific one?
Yes.
Ah, wonder. Okay.
With the Yala.
Ah, okay. Okay. But so, do you understand it? Did you get
you something? Why did the banks didn't ask what is the real I don't know how to say it. The real
value of the
asset.
house.
Yes. Does it didn't bother them?
Well, we'll see in a minute. What they did was to pass on to that special vehicle that they were talking about. Okay, so they got them. They created another entity, and the entity took the risk. So it had nothing to do with them. And what they did is they collected those mortgages, okay, and then they sold them off to the market. So they didn't care so much.
Mm.
And they didn't take the responsibility because they created some kind of a vehicle so that to separate between them and the new created security that they made.
כמו פלטפורמת השקעה, כמו פלטפורמה מסוימת שנותנת הלוואות, של קרן שנותנת הלוואות, ואז משקיע אחר בקרן.
כמו איזה מישהו באמצע, כמו מתווך שלקח שאסף אותם, ואז כביכול לקח את האחריות, שלא היה כבר יותר עליהם.
כן.
משהו כזה, אוקיי? And we'll see, these were not the only complicated kind of instrument that they were using. We'll see more on that in a while. If any of you has the chance to have a look at the film called The Inside Job, עבודה פנימית, I think. It is a documentary film, but it is very, very interesting, and I think you can find it on what is it called? Netflix, and it is very, very, very interesting, and it explains in much detail all what went on during the period up to the collapse of Lehman's. But we shall talk about it more next week. Okay, we just touch on the beginning of it, on the very first factor, and we